Ever scroll through those Instagram feeds? You know the ones, those rich people accounts, all those yachts and sports cars?
Uh-huh.
Makes you wonder, right? Like how'd they get there? Pure luck? Or is there like a secret playbook, some smarter way to make your money work for you that like the rest of us are missing?
It's a question a lot of people ask.
Well, today we're diving deep, really deep, into the actual investment strategies of the wealthy. And let me tell you, some of what we found was pretty surprising. For this deep dive, by the way, we're wading through data from some heavy hitters, Vanguard, one of the world's biggest investment firms, and research from financial gurus like of dollars and data.
Solid sources for sure. Always good to go straight to the data, right?
Yeah.
Cuts through a lot of the noise. And frankly, what's the word?
The speculation.
Yeah, exactly.
Yeah.
The speculation you always hear.
So let's jump right in. First things first, before we even get to the how, what are we even talking about here? Like, what does being wealthy even mean, numbers-wise?
Well, that depends. A lot of folks will be surprised to find out that in the UK, if you've got about 700,000 pounds in assets, you're already in the top 10%.
Okay, all right, 700,000 pounds. That's a pretty penny for sure. But I guess, I mean, feels somewhat achievable, over a lifetime of working and saving diligently. I'm guessing the top 1%, though, we're talking a whole different stratosphere.
Yeah, but 1%, that's a whole other ballgame. Globally, they hold, well, it's a massive amount of the world's wealth. We dug into some data from platforms like Vanguard, and let me tell you, in the U.S., for example, a lot of millionaires, we're talking like a significant chunk, have $500,000 or more just invested, and that's not even their whole portfolio.
Wow. Okay, so big numbers. Now, when I picture a millionaire, I'll be honest, I'm thinking risky investments, those big bets that pay off huge. Is that really how they built their fortunes, though? Or is that just Hollywood?
It's a common image, right? All about risk and big wins. But the data tells a different story. It turns out the wealthy, they're not really chasing the latest, meme stock or crypto craze. Instead, they lean towards, this might sound boring, but things like index funds and mutual funds.
Okay, hold on. Before we go any further, for those of us who don't have MBAs, break it down. Index funds, mutual funds, what are we talking about? And why are they considered boring?
Sure, sure. Imagine a basket of stocks. Okay, that's kind of what an index fund is. It tracks a specific market index, like the S&P 500. So when you invest in one, you're basically buying a tiny piece of all those companies, which spreads out your risk, makes it a bit safer. Mutual funds, similar idea, but they can be, a bit more actively managed, a little more hands-on.
Okay, I'm kind of getting it, but boring.
Right, so the boring part comes from the fact that they're not flashy. They're not about getting rich quick. They're designed for steady long-term growth.
So it's less about hitting the jackpot, more about slow and steady wins the race.
Exactly. And here's another thing that might surprise you. Property and pensions. Those are huge, especially for the ultra-wealthy.
Really?
Yeah, they see property as this stable investment. It tends to go up in value over time, plus you can often rent it out for passive income. Pensions, well, those are the ultimate long game. They often have some tax advantages and can grow steadily over decades.
It makes sense. But what about those entrepreneur stories, right? Building a business from scratch. That seems inherently risky, yet so many successful entrepreneurs end up incredibly wealthy.
You're absolutely right. Starting a business has a lot of risk, but it also comes with potentially huge rewards. And, we're not just talking about investing in a company here. It's the owning and building part. That ownership, that's a major wealth multiplier.
So we've covered a lot here, different asset classes, strategies. For those of us playing at home, so to speak, what's the common thread? What can we take away from all of this, regardless of how much we have to invest?
It boils down to two key things: discipline and time. If you look at wealthy individuals, they tend to diversify their investments. They're very conscious of keeping their costs low. Those fees can really eat into your returns. But most importantly, they think long-term. They're not trying to time the market. They're playing the long game.
Not looking for some get-rich-quick scheme. It's about building those smart, consistent habits.
Exactly. Consistency is key.
This has been fascinating. So for our listeners out there who are, fired up, they're ready to start building their own wealth, what's one small step, one actionable thing they can do today to get started?
That's the million-dollar question, isn't it? If building wealth is more about strategy than just blind luck, what's that one habit you can start building today, right now, to make your money work harder for you?
Something to ponder, listeners. Until next time.